All right. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 1st, 2022. So here were just some snapshots from the creativity lecture I gave to the Tharp Institute this weekend. I talked about the two creativity courses that I've completed that are available on Rizuku as home study courses, unlimited time access to them. Creativity 101 is the introduction to essential concepts, featuring a variety of well-respected creativity models, like Roger von Osh's Creative Whack Pack, 64 different ways to generate rapid insights when you feel like you're stuck, you need a little boost. The Creativity 202 course is the Fletcher treatment that is unique in the world. Nobody else has his method applied to traders the way we've done it. Let's see, I wanted to show. I thought this one was pretty interesting. I had the day before I was going to give that workshop, I had a little conversation with Angus, and we were talking about the difference between trying to predict the future and appreciate it. And we noted that we're both descriptionists, because we believe that there's a certain level of complexity that is incomputable beyond a certain point. And so I said, yeah, I'm not predicting the future or the drawdown, just assessing that there are changing probabilities of not impossible future states. And when we do that, we revise our rolling risk to reward ratios and adjust our risk exposure accordingly. And that we use speculative funds to reinforce momentum that follows sudden bursts of abnormal directionality. And that as the trade moves in our direction, we remove risk or keep it constant with our constant adjustment of the exit. So we want to normalize our risk at any time, always staying balanced. And so we are assessing a variety of opportunities among our manageable set to find the ones that have the most favorable current risk to rewards, and we're monitoring that continuously. And while we know history doesn't repeat, it does rhyme, and that humans, large enough quantities of humans, they act in statistically describable ways when they're under stress, the same way that frogs jump and wildebeest bolt when they hear a lion roaring. So those patterns repeat, and that's the essence of our statistical treatment of critical states. These are the two courses. Creativity 101 is about a 6-lesson, 10-hour course. Creativity 202 is a monster. I'm offering it for $1,000 in the month of February. And then on 1 March, it goes back to 2,000 forever. That is intended to be a relatively long-term engagement, 30 modules, self-paced, lots of exercises. You end up getting a lot of applied trading exercises, as well as the vignettes that Fletcher offers. So that's how you get the discount in the month of February, if you're interested. The 2-hour lesson on that I gave from this weekend is in Patreon. It's on the January index. I'm going to probably put it in the February index too, just to keep it current. But that lesson is going to get added to that course, because I thought we did a pretty nice job with a sample practical exercise using small group experiential learning. I think you'll find that interesting. For those of you keeping score at home, for the blended monthly rebalancing for the January or for the February transition, these are the ones that are in play. If you're going by the strict definition, you would be in cash already and would have been in cash for a couple of weeks on ETF 13 because all of those are still below their 4-month moving average. In ETF 22, you can be long XLE and XLP because they are above their 4-month moving average, and ETF 32 can be long all three of those because energy is above its 4-month moving average. But those are the leaders going into the clubhouse as of today. So I wanted to share that with you. Here was my trade from this morning. So before the market was open, Danny, who has programmed the TC 2000 bundle for us, and he and I talk almost every morning. He said, hey, pre-market activity is strong in the marijuana ETF, MSOS. So we dialed it up, and this is what we got. Here was the opening bell, and it immediately sold off into a morning hook, established a bottom, made a move to a lower high, sold off again quickly to a higher low. So this actually gives us like a Kata 2 style of a formation. We take a look at this, low, and then makes a higher low. So I made the entry when it took out the high of the previous bar. So this looks like a 1, 2, 3 kind of emerging dragon kind of a pattern. Let me click on that for you. Just this is how so it makes a low, a high, a higher low, and then at 4, I make when it breaks out above the previous high, that makes it look like an emerging dragon to me. And then this is a standard risk box here in marijuana. That's it, minimum manageable risk box. That's about 40 cents. So that's about 1,000 shares. I'm starting to feel good when it makes this run, pulls back, and then takes off again, makes like a second emerging dragon. So that feels pretty good right here. And now we're at no lose plus dinner for 2. As soon as I make this entry, move that stop to about here, and then that nets me 100 if both of those positions exit. And then as this is grinding upward, now notice there's no resistance overhead. So this keeps making a gain, 2 steps forward, 1 step back, keeps doing that. So now I'm feeling better as each of those higher lows is made. And then right around 11 central, it gets into this consolidation, can't really make new highs, isn't making new lows. Then it makes a higher low and starts breaking out. I said, consolidating, then breakout. So I'll try a third position. And then it starts failing through the series of higher lows. I should have taken it here and just scratched the third position and made bank on the 2, but I gave it just a little bit more. I wanted to see if it could hold above this most recent high. It couldn't. And so I exited there, gave back a little bit on that one. It's, I think, too much. That's about a C- exit. I should have just done what I do, and that is scratch the third one when it did not follow through higher. Because you got to remember this loss from here to here, right? If we go back and compare that to the original entry, each one of those is about a half an R on 3 positions. So that's about 1.5 R I gave back, which is too much. So that probably nets 3 or 4, but I gave back 1.5, and that was too much. So that was this morning's find the mover trade, and thanks to Danny for giving me the alert on that one. All right, let's take a look at the market health check. So today, the continuation play, it held above the north skin of the dragon, and now you notice that the dragon has basically flattened out and essentially moving sideways. The RL10, which peaked at the bottom here, has now crossed the baby dragon and gotten to the middle of the dragon. And then tomorrow it should be clearing the dragon. Tomorrow we should see an RLXD. So if we get that, then we would expect probably to make an entry somewhere right about here, this blue arrow. Now, what I want you to notice is that by taking the when price hits the trailing PSAR, if you take that as the entry on your swing, you actually get a slightly better entry, like at 450, because in this case, the price move of those 3 bars is faster than the corresponding movement of the RL10. So the RL10 is pretty fast, but it does lag behind by a certain distance, so you get an entry here instead of tomorrow. It'll probably be up in this region. So that's one of the reasons to pay attention to that, to the PSAR as it's declining. So as this continues to fall, and then you're getting a bottom put in and it starts to take off at that intersection, that's where I like to enter. And then you can use either the bottom of the dragon, which is aggressive, or the bottom of the RL10 as your risk box. And I recommend the RL10 until you get more experience trading these patterns. Okay. So let's see what else we got in this thing. All right, so the 3-period haul is driving up. The RL10 extension, I've added that to the mix. Now that is strong and up. We do have the RL30 extension is still pointing down. So for us to get an owl entry, we have to see that RL30 flatten out and then start to roll up. So that's we're probably 4 days away from seeing that at the current rate. And what would work is even if tomorrow or the next day pulls back and then resumes, that would still be enough to probably make the RL10 turn. We're waiting to see the bottom of the dragon roll up. Right now it's flat, and then that has to turn up. So when the slope of the dragon goes up and then the slope of the RL30 goes up, then that would give us an owl entry for swing trades. The 10-day high is still here, looking at about 459 at that price level. The Bollinger Band mean right at 460. The RL90 at 466. Long-term fair value is flattened out around 475. Notice how the recent weakness is making that roll over just a little bit and has come back to the north shore of the dragon. So we're actually seeing that the longer term trend running out of steam a little bit. So we'd like to see some new energy on this that could then break above the all-time high at 480-ish. And then that would give us some upward mobility in the RL270. But other than that, all systems go. 10-day and 30-day low down here around 421. And the belly of the RL10 here at about 428. Belly of the Dragon at about 438 for key price levels. But the upward movement is still in play. We've had 2 strong days in a row. Let's see what tomorrow shall bring. Let's check on the leaders now. All right, so the S&P was up 0.68 today. The Qs were up also 0.68. The Dow was slightly better at 0.81. The Russell was the best at 1.05. Emerging markets slightly lagged at 0.61, and then the treasuries gave back 0.5% to 0.47. So let's take a look at the sectors that outperformed. All right, it begins with the FANGs at 1.13, followed by, let's go. Mexico, clean energy, finance, agriculture, materials, lithium, biotech up to 1.6, Brazil, both of the ARCs up to 2.19. So a pretty good mix of different sectors and indexes. I mean, you've got ag, materials, lithium, ARC making a recovery. Moonshots, 2.4. Blockchain, 2.9. Continuing another nice day for the cryptos. Energy, 3.6. Ethereum, 4%. Oil exploration, 4.2. The large cap blended crypto, 7, and then marijuana, 7.8%. Really strong performance from the metals. So yesterday it was US Steel that was the dominant player while the other metals lagged. And we said, hey, let's be on the lookout for the other metals to start catching up to US Steel. And that's what we saw today. Saw a strong move in Cliff at 7.5%. US Steel on second strong day at 4%. In the industrials, you got Devon Energy at 4, TX and Alcoa, more metals at 2.7 and 2.5. So this feels like the metals pulling XLB north, right? So XLB was better than the S&P at 1.54. So I would look for additional continuation tomorrow in the metals, and I would start with Cliff. That feels pretty good. Now, Squarespace at 4.3, Coinbase, Robinhood, and PayPal. Those are our 4 financial disruptors, all doing very, very well, better than 2%. So nothing to hate there. Let's take a look at the Robinhood. Wood. I missed that one on the way up. Sorry. The lumber was slightly better than the S&P, as was wheat and precious metals. They were stuck inside there. Couldn't see them. All right, so the S&P was at 0.68. Here are the underperformers. The consumer discretionary, 0.6. The other lumber, 0.4. Blended commodities, 0.4. Tech, 0.26. Bitcoin Trust, 0.17, or I'm sorry, Bitcoin Futures, I should say, 0.17. The Bitcoin Trust, 0.11. Commercial real estate, 0.11. Oil, 0.08. Consumer staples, minus 0.09, getting into the negative territory now. And then VIX, 7.38. Now, we were concerned yesterday about the the fact that we were still in sideways volatile and that we wanted to see evidence of continuity. So some of the big gainers from yesterday gave back a little bit today. Microsoft 0.7, Tesla 0.58, but Tesla is still above 9.25. So I feel that was all right. Given the magnitude of yesterday's gain, that's not much given back. Apple gave back a fraction as well. And then John Deere slightly underperformed. So I still think we got a pretty broad base of key leaders. I would look for additional strength tomorrow out of these. And again, I'll be prioritizing the metals and the disruptors, financial disruptors again. Oops, sorry about that. Accidentally closed it. All right, the second day of reasonable gains has brought us back up into bullish volatile conditions. So we've made, we looked over the edge of the cliff and we recovered a little bit, but again, we're only 0.25% above that boundary with sideways. Remember, sideways is within 2% of the 200 days. So we're at 2.25. So we are just one step into the bull. Now it's red because that's still one of the worst performances of the last 180 days. So that's why it's coded red. It's a dangerous bull, finicky. The risk Z is still reminding us that times are tricky, but the bottom is starting to be established pretty soon. That could become spring, which makes us interested in the swings. Two symbols that are signaling overreaction shorts, and that's the Qs in Latin America. What this means is that they were so weak earlier that the little rebound they've had in the last 2 days now sets them up as a dead cat bounce. So if we see weakness in the S&P and we saw either of those also weaker than the S&P, then those would be the first two places to look to get short. That's how you interpret that, the short side rule. Okay. AXB, McDonald's, diamonds continue to dominate. Goldman Sachs is starting to come on, along with the strength in finance today. We've been talking about that one for a week. Handful of dojis in the Dow. Goldman Sachs had a pretty good day today, it wasn't one of the percent winners, but I like the fact that it outperformed the S&P and did 2.35%. So it's been positive now 1 day and 10 days. So I like that. And that feels like it's turned the corner. His partner in crime, JP Morgan, also was positive, but not as strong as Goldman. So all other things being equal, that feels stronger. And I want you to compare that to American Express in the financial sector. And you see, it's easier to believe in American Express because it's been positive on every measured time frame and was still up 2% today. Travelers in the financial services has also been quietly getting it done in the green all the way through too. But here's ExxonMobil, just get out of my way, it says, and Chevron for that matter, in the energy space. 5 dojis in the ETFs, a handful of auto framers looking pretty good. Energy just is the no-brainer, as are metals and mining and XOP. Metals and mining, that was the alert from yesterday with the nice work that was done on the swing trade frame over the weekend that Ken Hum set up for us. So Chi Wang Chong has a really nice 2-day swing trade working in there. Auto Framer still has plenty of symbols that test out well, better than 2-to-1. So here's all the mechanical framing data for all these members that are better than 2-to-1. I would be looking hard at Caterpillar, and as the industrials have started to make the turn. I think emerging markets and real estate also. On the daily squeezes, I love it when Microsoft has a nice quiet day on an up day. So that's I mean, they were negative today, but the market had a quiet up day, and Microsoft had very small range along with the tech sector. I might even widen that to include the triumvirate of Intel, Microsoft, and the tech sector itself. And the S&P at 1.8 is still pretty close to the top, meaning that today was a pause in the move. It did not fail. It closed stronger, made it through the dragon. That actually feels pretty good, ready for another day of gains. Starting to see a little more spring action come to the front. And there's your turning point now in Goldman Sachs and JP Morgan in the big banks. Along with Visa and financial services. But American Express and ExxonMobil are the two real no-brainers right now in the Dow. Plenty of strength to choose from. I really like Devon Energy here, our mid cap. And oil and energy. Evidence of a bottom has been established and a retracement recurring. And you can see the bounce off the percent stretch is starting to come back to normal. And we're back into the river, which is a good thing. Let's see. Yeah, this is Chi Wang Chong's second day of the swing. You will recall he got his swing entry here yesterday when it took out the previous bar's high, and now he's locked in this gain. That's a pretty good swing day at work. Nothing wrong with that. So hat tip to Ken Hum for the alert. Let's take a look at our traders' work today. Feedback for their hard work. Let's see, where's my All right, so this is Mustafa. He's well familiar with Park, and he gets he gets an entry in here. I want you to notice that the PSAR flip occurs here. You might consider this as your signal, and maybe get you get that extra gain. And then I might look at this as a second position when it does a PSAR flip, but then doesn't really break down further, and then comes back up and through that PSAR flip, that gives you a second position. So you might have had 1 here, 2 here, and then that's a great exit. And so instead of 7, that might have been 12. Here's 5 in Lee Auto. He gets the collapse. He basically front runs the PSAR flip, so that's a great entry. Well done. Gets that little piece. Now this is the one I want you to notice: the belly of the RL10 and the RL10 and the PSAR flip. So you get this all the way up to here. And this could have been 10. And then finally, here's Spirit. These are all on 2-minute bars, by the way. Gap and go, gets the range expansion, gets paid, waits for the kata 2, takes the PSAR break. Looks like here. I think you stuck around too long to get out somewhere in here. I'd like to see you at least scratch. Feels like your normal practice would have been somewhere around in here. So then I would say this one gives you a PSAR flip and a nice short, which a 1, 2, 3 exit would be here, and then stop and reverse. That's a real nice front run on the PSAR flip. Got paid. Second entry may have been a little slow, but I like the fact that you're waiting. At least this is really like an emerging dragon, waiting to see that go. Then when it doesn't go, you take a micro loss, micro loss, micro loss. So I think there was a little extra. There may have been a little extra room in here. And then this, take a look at the short side on that one. This is Joe with US Steel. Here's the gap. We missed this part of the move. This is an emerging dragon. It was way late. Scratches, or not scratches, exits for -1 at the PSAR dot. This might have been the re-entry. I'd have been really tempted to get short here as it crossed the VWAP, and I would have tried to scratch, and then maybe tried long here, and probably would have scratched there as well. Now, the one I want you to notice is the high, lower high, and then crossing the VWAP. And if you take the top of the dragon or the PSAR, that doesn't get you out. And then I think you end up getting this. You probably get this trade from here to here. Then here's your SSC all day. So this is where it has collapsed through the VWAP, and that's always a good signal down. So there's your harsh winter. It really couldn't fail and get all the way back to RL, whatever this is, probably the 200. And then winter turns to spring. Now you got the kata 2 portion of it, unfortunate here, but I would like you to take that one again as it crosses the VWAP. and then you probably exit right about here, so you get paid a little bit. But that's the one we got to watch for right there. The S&P, again, late getting in. PSAR flip, winter turns to spring, or I'm sorry, this wasn't late. Sorry, this was the open. That was yesterday's close, so never mind. That's a reasonable effort. Good scratch, but that's if this is like a frog box or frog rolls, you would just stop and reverse here, and you're going to get paid. If that's one, two, you'd have been 3R to the plus, and you probably give one of those back. So you probably exit here, stop and reverse here. You'll get paid. Then you have a COTA 2 here as it's crossing the VWAP, and then another COTA 2. So that whole piece needs some attention. Mentally tired? Do you need to take a break or get energized? So, but that should be routine follow through on the upside there. This is nicely done and makes your gains. I'd have strongly considered adding either here or there. But again, you're getting close to the end of the day, so I don't blame you for not doing that. Here's Tesla. Let's get the scale. I want to find the mover. Here is the open. Here's a collapsing dragon off of yesterday's little low. So we might have gotten this as an entry. We might have gotten this as an entry. That's not bad, because this is where it got below yesterday's closing VWAP. So there's still reason to believe this could fail. This is a pretty good exit. This is a stop and reverse, got paid. It held, beautiful entry, tight stop, got paid. I'd like to see you re-enter there and scratch. Held pretty good here. Unfortunate. This has got to be a stop and reverse, so you can get paid here. A high, a lower high. I'd have been really tempted in either in here or here when it crosses the VWAP to be short. That's a great entry. I'd encourage you to get out here rather than here. As choppy as this has been all the way through here, I think I want to get paid right there. So we got paid today, though. There's a little bit of improvement. All right. SSC, I would be shorting here. I think you did, but I want to at least scratch this. Good stop and reverse. Unfortunate, but you got to keep taking the shots. That trade there pays for both of those. And then there's just not much more room in there today. That's just what was available. That's not bad. That's kind of what you should get on a day like today. Tom and Joe, there was not much follow through. So today was a fractional loss. Just was not much follow through after the gap on either one of those. Not much more to see there on the 10-minute chart. Here's Luke. C3 pinch. PSAR flip. Gets paid. On the flip, he gets the breakdown. Nice work. Better stop and reverse. The stop and reverses are pretty sharp today. Good scratch, good reversal. This is where I'd really want you to look at a second position, because you got a Z3 pinch. You're well in the money. You're breaking out above this hump of the dragon, this hump of the Z3. So now this is free and clear. And then when you get this, let's keep more of that instead of all the way down here. That's okay on one, but you still gave back too much. But if I got a second position, that's where I really want to be aggressive with a 1, 2, 3 exit there. This is a good effort, good stop and reverse, good risk control, good scratch, better capture. Again, this is one where you're starting to work with some second entries now. So you have a high in the RL10 twice. You have the Z3 pinch here. That looks like a second position to me off of this one. And then that would be nice. So 7.5 today, that could have been 10 to 12, I think. Here's Robinhood. Getting some stick time and got paid to learn. Working on different stop losses and exit strategies. So let's see here. We got a short with a risk box. I'd like to see you getting short up in here when it crosses the 270 and the VWAP. And then if you got short here, then that trade is nice. I'd like to see you, instead of scratching that, make it a no lose plus dinner for 2. Keep a little bit, especially when it gets that far. The stop and reverse was a little slow. That should be here. It got paid. This short should be here where the PSAR break occurs. And then that's an even better trade. This is where your stop and reverse should be here. Instead of here, it should be here, because you're rising and you're buying it on the value side of the VWAP. And then you would get a whole big extra chunk right there. Nice. This is like an emerging dragon reentry. It might have been a little slow, but that's still pretty good. Good scratch, good scratch. This stop and reverse here could have been done here. Good follow through. So this is looking pretty good, mostly through here. There's a few places to tighten up, but again, your no losses greater than 1 R. You're in good shape there. Wojcik on the Aussie. And the 5-minute. I like the Z3 pinch and the emerging dragon. That's nice. Good exit. I'd be really tempted for that short. So you might have gotten paid there. I like that as the long, good exit, good try on the short side. This could be a stop and reverse that gets paid to here. This short should be here where the PSAR gets violated, and then that's a good exit. Perfect. That is a perfect SSC. I would probably get out here when it had 7 bars. That's 30 minutes, and it hasn't really made a new high and is starting to come back into the dragon. You get paid here, but that's a micro improvement that you might have gotten. I'd have been tempted to take this one as a higher low and there wouldn't have been any payoff, but still got paid to learn today. A few a few micro improvements in there. Here's RTY, our last one today. Does a nice job of staying out of the chop, although I'd have been tempted here, like on a Z3 breakout. This is still fine. Good stop and reverse. Unfortunate, but you did get paid. When this breaks down, I'd like to see you get short here instead of all the way down here. Then when you get that kind of a move to the downside, maybe we can capture more of this unusual gain that's well outside the Z3. When you see that kind of, you're already getting short at the Z3, so you know this is an amazing move. When it comes down all the way to here and starts to reverse, and now it takes out the entry of that candle, that's where I think you got to get out and cash the gift. This is a nice stop and reverse. Nice caught at 2. That's pretty good stuff right there. Just, we call that P7, you know, the like, it's like an extreme Z. When things get beyond the Z3, you want to really make bank on it. This one was tempting, but again, late in the day, I don't mind not getting that one. All right, good work today, guys. We'll get this published and processed. I'm really pleased to see we've got, we're not taking losses greater than 1R anywhere on any chart today. That is the secret to long-term success, is having the left-hand side of your histogram tightly constrained while remaining open to the possibility of large R moves. So nice, really nice work in there. Oh, there was a comment in chat, just a moment. Stand by. Yeah, so Mustafa asked or said, hey, on a day like today, it was minus 1.8 on the chart that was there with the 3 or 4 trades. Well, those 3 or 4 trades were correct. There just was not large moves available in there. You know, 4 losses and it nets minus 1.8. You know, that's not even a half an R loss on the 4 trades. What's the max loss to stop at intraday? For me, it's minus, it's I got 4 bullets. When I run out of, so I have 4 units of risk. Let me try to draw this for you. You'll see a discussion in the foundations course on money management and the idea of 4 bullets, but I'll cover it briefly right now. So I start the day. Oh, come on. It's not let me draw. Why is it not let me draw? I don't know why it's not letting me draw. This is strange. Okay, screw you. All right, so I start the day with 4 bullets. Each one of those represents 1 unit of risk. Each one of those for me is $400. So each one of those 4 bullets represents $400. And my span of control is 4. So I could have 4 symbols with 1 scoop on each one. And then all 4 of my bullets are accounted for in the market. So if I see a 5th trade that I want to take, I have to sell enough positions out of those 4 in order to recoup $400 of risk capital. So when I look at the 4 things that it takes for me to trade, time, will, pattern, and money, as long as I have those 4 things, then I'll just keep taking the trades. Because as we've seen here and for the last month, every trade starts off looking the same, and you don't know ahead of time which one is going to be the one that breaks out. So if I get 4 little micro losses in the morning and it's minus 1.8 R, I still have 2 full bullets left. And if I see patterns, I have enough time. Do I have a 0 state mindset, or did I let 4 micro losses discourage me? So now I'm not in the 0 state. If you're discouraged, then don't trade. But if you could get back in the 0 state, you need 4 things: time, will, pattern, and money. I have time left in the day to make the trade. I am in the 0 state and feeling professional. I see a pattern that I know, and I have prepared the trade frame for it, and I have risk capital to take it. So I just keep going. But for me, what limits how much that I can trade is I've got 4 bullets, and I can only have 4 open positions on my day trading at one time. Now, what I'd like to have is have 1 symbol that I was able to get 4 bullets into. So like maybe it was an SSC, and then a COTA 2, and then it kept going, and a COTA 2, and a COTA 2. Now I've got 4 positions into that. I am fully all in at that point because I've got all 4 units of risk into the market. Now, if I made 10R on that, what I will do is, if I then cashed it and I have plus 10, all I do is I put all 10 in the bank, and I have my 4 original bullets back. So I'll just keep trading it, but never with more than 4 units of risk ever. So hopefully that answers your question. Okay. All right. That's everything, fellas. We shall see you